Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI, joining us for his roundup of how trade values performed in May. Now, last time we spoke to Jeremy a month ago, he reported on ongoing price stability, which resulted in used car trade values dipping just 1.5% in April. And that was very much in line with the average for the month and indicated continued stability for trade values. So we're about to find out if that welcome pricing stability continued into May. So welcome back to the pod, Jeremy. And certainly from a data crunching and market analysing point of view, you're probably glad that we've got those two pesky bank holidays out of the way, aren't you?
Yeah, I think, well, definitely us and everyone else. And yeah, good afternoon, guys. Nice to be back on the pod. Thank you for having me.
No, same to you. We'll get on at the end around your prediction from last month into this month and what you expect going forward. But to begin with, let's go through the usual, looking at the headline figure, that 3-year 60 point was down minus 1.3%. And, how did that market in May compare to previous Mays as we move into the month of June there?
Yeah, so as you just said, down 1.3%. That's actually, on the stronger side. I think it's our fourth strongest May into June on record since Cap Live was introduced in 2012. So a really steady month overall. A drop of about 3-year 60, about £235, or roughly around £235. So yeah, it was a pretty good month. I thought it might go a little bit more, if I'm being honest. I thought it might be at least 1.5. As we got quite early into the month of May, and the disruption that you mentioned earlier about the bank holidays and what have you. And it was a bit disruptive, and it always is, especially it being so close to the Easter bank holiday that we had previously. So how that compares to previous May into June's, pretty good actually. It's actually in the last 4 years, it's the strongest movement down. Last year it went down 0.9%, and the year before went down 1.2%. And 2022 it went down 0.7%. So it does look a bit worse than the previous 4 years, but bearing in mind, if you remember some of the I guess the disruption we had at the back of 2023 and these really strong movements, hard moves we had down, I think that's why last year was actually quite strong compared to usual seasonal averages. Seasonal average from May into June 1.6%. We ended at 1.3%. I thought it might be 1.5%. So yeah, I think it ended up pretty good, I think, from more stability around for all, which I think is hopefully quite welcomed by everyone in the industry.
And I mean, obviously, we'll get on to sort of fuel types and sectors shortly, but that sounds more like, and we hate to say it, more like a normal sort of seasonal movement for this time of the year, going from sort of May into June.
Definitely, yeah. I think you've got to look to the pre-COVID movements month by month, or the average from 2018 to 2013. It fits perfectly within that. If anything, it's the stronger side of even the pre-COVID, but definitely seasonal is, we've gone from using the S word of stable to the S word of seasonal now, and it definitely feels like that. No matter who you speak to, retail or trade, it definitely feels that.
And just as a follow-up there, we talked about the pull forward into March in terms of that new car registration, which was reported to be as a consequence of the luxury car tax. But obviously then we've got the 10.4% decline in April new car sales. Did you see any sort of result of that trade-ins and availability of part exchanges coming into the network in May? And how much did that kind of influence price adjustments?
I think it did positively, because obviously there was maybe slightly less coming back through the part exchange channels, through maybe some of the retail which wasn't done based on the increases in VED throughout April. There was quite a lot of pre-reg activity from through the back end of March, which tends to still be around there. And I think that's impacted prices negatively, I guess, at the younger age points, and certainly for some of the cars anyway. Where there's some hard push by some OEMs and some dealer groups, but it results in, I guess, in terms of the positive side of it, at the 3 year, there is still less cars around generally anyway. We're in a pretty, I guess, still pretty good market overall. It just feels like, I guess, that S word again, just seasonal activity around. So yeah, less cars. I think there's probably been slightly less demand, if we're being completely honest, a little bit less of bidding activity. Conversion slipped a little bit, I guess, overall, but yeah, we're still in a good place, considering nothing's fallen off a cliff, which is good.
So, looking at the editorial in a bit more detail, Jeremy, and we'll be looking at fuel trends in a moment. Were there any notable price movements that you tracked by age points for the month?
Yeah, so 1 year and 6 months, that dropped 1.2% overall, which is about £350 at the 1 year point. 5 years dropped 1.6%, or about 190, just over £190, and 10 year was a little bit less than that. 2% overall in terms of a higher percentage drop, but still quite low in terms of pounds, just over £80 overall. So yeah, nothing untoward, even in the different age groups for sure.
And each month, we look at the vehicle sectors and how they perform. So any trends there, maybe starting with the coupe cabriolets and convertibles, which traditionally are popular in terms of sourcing stock this time of the year?
Yeah, definitely. I think, we've definitely hit that. Again, it's that seasonality, isn't it? Again, around, soft tops. They're becoming quite rare, I think, even at some of the younger age points anyway, and even at around 3 years. But coupe cabriolet went up 2% overall, and convertible went up 0.6%. So definitely, they were the strongest two vehicle sectors within the portfolio we look after, obviously. And yeah, good, driven by sunshine. We've had, up until probably the last few days, a really, really good long period of sunshine and good weather. So I think that's probably what's driven on some of the increase in performance for those vehicle sectors there for sure. Yeah. I think when we look at some of the other sectors overall, upper medium, so A4 BMW 3 Series, that was the next highest performing mainstream vehicle sector, down at 0.8 overall. And then if we look at the true mainstreams like City Car, that was down 2.1% overall, lower medium. Hatchback sector, medium sized car, down 1.5%, and super mini and SUVs also down 1.5%. So everything fitted more or less in line with the overall average of 1.3% drop.
And as I said before, Jeremy, we always get onto this conversation around fuel type performance, and we can't get away from conversations around battery electric vehicles obviously being the main key discussion and point, following the 5 consecutive months of softening. How did they perform over the month of May at the minute, and is there any sort of shout outs in terms of models that stood out in terms of increases and falls in that sector?
Yeah, so that is definitely the hot topic. Who we speak to, whether that's auction companies, leasing companies, any retailers that we speak to, it's the large part of. It's actually exhausting to keep talking about it consistently. But yeah, they dropped 3 year 60. It's unfortunately, it's not great news. They did double the average, a little bit more, 2.8% overall. And that's a drop of £480 at 3 years again. So yeah, further deterioration. That's on top of 2.7% last month, and for the year to date, it's just below 10%. And I think, to put that into context, if you look at petrol's dropped just about 1% in the same period of time in year to date. So it does highlight the fact that BEVs are still probably the most difficult part of the market and continue to be. In terms of models, Nissan Leaf, that dropped 6.8%, or nearly £670 overall. BMW i3 down 5.5%. Lexus UX, that was down 5.4%, £830. And also Kia e-Niro as well, the latest generation 22 that was down 5%, or £880 as well. So that's just the ones which have probably dropped the most overall.
And I mean, there has been some stability though, hasn't there? I mean, there's been some marginal increases on a couple, and if we look at some of them against the seasonal overall average of 3 years, 60 movements down 1.3, there's a few models that have fairly stayed stable, haven't they, in fairly level, which you could see as a bit of a positive, the fact that they're not heavily falling in value.
Yeah, definitely. I think there's probably one or two models which got the one that sticks out in my mind is Mini EV that increased, I think, nearly 1% overall last month. And that's been on a downward journey, but looked really, really cheap, really good
So
value.
yeah, it's a good value now, isn't it? That it's felt some pain, hasn't it? But now it looks a good
Definitely.
value proposition.
Definitely, yeah, and when I look at those cars, and they could be trading between say £8,000 and £10,000, I think that's a really really good retail opportunity for a lot of retailers out there. So, and they're considerably cheaper than the petrol variants as well. So, as a second car, perfect little runaround. And to your point as well, there are some cars that haven't moved at all, which again I think is a positive. There's just different cars at different. We can't talk about electric vehicles as a whole. You really can't. You have to talk about it, in terms of the specific models which are relevant to your business or whoever, the leasing company or whatever, and look at it in isolation because they're all on different journeys in terms of where they are in their life cycle. And I think that's really important to highlight again. So they're not bad news. They just seem to be just dropping. The overall average figure probably looks a little bit worse than maybe some of those other models, which have been pretty good.
And we can't have this conversation without looking at sort of the hybrids, plug-in hybrids, petrols and diesels. How, in general, have they performed at them sort of the various age points over the month of May?
So hybrid again, I think the same as last month. That's down 0.8 overall. That was the strongest performing drivetrain or fuel type overall. That's just normal self-charging hybrid. Petrol down 0.9%, so a good chunk below the average of the 1.3%. I think they tend to be sort of the go-to sort of drivetrains, and for a lot of retailers, regardless of what space you sit in terms of independent supermarket or franchise, they seem to be some of the quickest to sell. EVs were the quickest to sell. They're probably not quite so much now, just based on the volume. Looking at diesel is down 1.5% at 3 years, and plug-in hybrids down 1.6% as well. So a little bit more pressure in some of the other fuel types away from petrol and from the hybrid. But yeah, not a bad result overall. There are some good performances within there for sure.
Fantastic. Well, we'll be back after this short break with more from Jeremy and Cap HPI's analysis of the May's used car trade values.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Each month, Jeremy, within the editorial, you analyse retail activity by days to sell. How did they perform in May compared to April?
Well, fastest selling drivetrain or fuel type was hybrid. That was averaging around 30 days. That was followed by petrol, 37 days. PHEVs, 39 days. BEVs were 40 days, and diesels are 41 days. So diesel's the worst performing in terms of how we track it. So yeah, it's BEVs were the quickest, as I mentioned earlier. They have dropped down the order, if you like, but I think that's just down to probably more supply and some more selection and more just availability, I guess, for retail consumers. But yeah, hybrid's definitely the quickest, and but that's by some margin as well, by 7 days to petrol. So yeah, they definitely seem to be performing very well at the minute.
Yeah, and you also polled the views of the auction houses. What were they telling you about stock levels and trade demand for the month?
So if you look at stock levels decreased actually from April to May, whereas in April only 15% said that stock levels decreased. Actually, nearly half said in April that they'd actually increased. Well, it's flipped around the other way a little bit. So it's 42% that decreased in May, and 25% actually said it increased. So a little bit of a different view from April into May. And I think on the point earlier about maybe some less part exchanges into the market for some auctions. So yeah, a little bit of a falling stock level across the board, I would say.
And Jeremy, just finally now, we'll get the crystal ball, and this is where Curtis will have his pen and paper ready to write down. We obviously start to think about, we're in the middle of half term. There's a few, half terms going on around the country at the minute. What's your view now on prices as we go into the month of June? Are we expecting more of the same? Weakness in some of that EV products and fairly seasonal for the rest of it. What's your expectations now as we head through this second quarter of the year?
I think so. If I just look at June in isolation, we think it's probably
No
going to be
push
to start with.
He's hedging his bets.
So
It's better to do long-term ones that you'll be less challenged.
Probably. But I think so June we think is probably going to fall more or less in line with the seasonal average again, 1% or just over. So yeah, you can hopefully you can hang your hat on that, everybody, which is further stability. So yeah, we could do some more of that. I think you mentioned there about electric vehicles. I think unfortunately some volatility still remains. I think the prices against some of the cap clean figures are just still not achieving for some models. There's lots of different things going on, and that could be at the front end in terms of discounting and chasing the 28% for OEMs and for dealer groups, in terms of their targets. So it's going to continue to be volatile. I think very at the younger age points, as well as and that does filter or ripple through to the three-year-old point, and probably a little bit older as well. So. Yeah, let's hope it's just not as much as what it has been. I wouldn't want to put a figure on that because honestly, I could be left with a complete egg on my face. But let's just hope it's less than what we've seen in the last couple of months.
Yeah, I don't think it will be. I think at the minute, that EV sector is, as you said, right on that earlier part of the conversation today, is that it's still a very volatile sector. It's still the smallest sector in terms of volume. Yep. Of data records going through it, and it's the most volatile with the new entrants and strategic shifts in that sector. So I think, trying to call you out too much in forecasting EV values might be a little bit too much of a challenge. I think there's expectations, but I think in general it gives a bit of the reasonable seasonal return now in general, albeit not around battery electric vehicles. And are you hearing reports that we might start to see some volume starting to return to the sector at sort of the end of the quarter as sort of life cycle starts to come in?
I think so. Yeah, I think we know that this car has been extended within the fleet sector. They're going to be coming back through every month. Some of those vehicles may not even still be returned from the March plate change or even in April because of disruption to logistics and the bank holidays or people being on holiday, etc. So I think we're likely to see some more volume come back through the market. But do you know what? There's a lot of businesses out there who do need volume. They do want to buy stock, and we've got to remember that we are still way down. We're still missing that big hole of vehicles within from the COVID years. So that still does exist, or whatever number of people want to put on that. But they still do. They are still missing out of the market, and I think that does breed a little bit of I guess optimism. And good feeling within the market. It's just volatile in certain areas as well. But yeah, I think the outlook's pretty rosy, I would say. And even if we do get a little bit more volume, I think it's going to be welcome. Hopefully.
Yeah. No. I agree. Yeah. And so I mean, as a brilliant coming on, and we can get your editorial through any of the social channels with yourself and Chris Plum, Rachel and others within the editorial team there, and if you do need to get it, then you can go to the cap-hpi.com website and download the full car editorial and LCV editorials and forecasts, gold book forecasts are available there. And I think, would you say that the webinar is still relevant that you recently had, Jeremy?
Yeah, definitely. I think there's some really good slides in that, certainly from Dylan's side on the forecaster side, as well as the van market and obviously the used car market as well. So and I think the next webinar is going to be first week of July, I think. So we've still got a good few weeks away from that. But yeah, they are definitely still relevant. But if anybody needs any of the slides, again, that's on the website. The deck is on there, even the recording if you want to listen back to that as well. So publication days today. So they are fresh, hot off the press today. If you want to go and get the go and get the one off the website, or like say Chris and I have shared it, as well as some of the other guys have shared it certainly through LinkedIn anyway. So it's easy to get. But if not, just reach out to me, and I'm happy to send it to people anyway.
Oh, that's brilliant. Many thanks for that, Jeremy. And once again, many thanks for coming on to the podcast and sharing some of the details, behind what goes into the editorial. So many thanks for that. And this has been a special weekday Motor Trade Radio podcast. Many thanks to you for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.